Today I want to talk about the tone of trade, a way to use Elliott that will help you with the risk reward and probability when you look at the markets. When you look at any particular market, and today of course I'm going to focus on the bond market, the tone of trade, how the market is trading will give you a great insight into whether the market is likely to continue in the move or go in the opposite direction. Let's start by looking at the first chart. On this chart, what we're seeing is September 10-year futures. This is a 180-minute chart. Now, the first red arrow on this chart shows a strong and impulsive move into the peak in June 2019. That is a strong trending signature. Look at the move after number one in green. What you see is a choppy corrective move, a counter trend move, a non-impulsive move. That told you that the trend was still to the top side. Continuing in tens at number 2 and number 3, the red arrow shows strong impulsive move. Just recognizing that it's impulsive without even getting into the details of the wave count told you it's a trending move that has further to go, especially when you juxtapose it with those two green arrows under number 2 and 3. Choppy, overlapping, again, counter trend in nature. Now, it's not just a story of tens, of course. Let's look at the next chart. The next chart is September 30s in the US bond market. Same pattern. Look at the black number 1. The red arrow into there shows a strong, impulsive, and trending move. Since then, you had a green arrow showing a choppy, net sideways move. That told you the tone of trade was still to the top side. And of course, at points 2 and points 3, the red arrow showed still a strong impulsive gain, which again signals the trend had further to go, whereas the green moves suggested that it was a choppy corrective fashion. At number 3, in fact, just last week, that green arrow was last week's trading in number 3, a choppy corrective move to the downside, which we continue to tell subscribers is just not a trending signature. The bull market continued, and that subsequent red arrow seemed to prove the point. And finally, let's not just focus on 30s and 10s. Let's take a look at 5s. And on chart 3, same story here. Now, when you get to the front end of the curve, it's a little more particular, but here too, at that black 1, look at that first red arrow. Strong, trending, impulsive move that told you the trend would continue. The green arrow since, choppy corrective. And then into black number 2, you saw a strong red arrow trending move. Since then, you had those green arrows, choppy, corrective downside. In fact, the purple arrow shows not only was it choppy and corrective, it was net sideways. And that was last week, and once again, followed by an impulsive rally to the top side. So just looking at the tone of trade, whether it's impulsive, whether it's choppy and corrective, can give you great insight to whether the trend is likely to continue. But when you talk about the bond market, of course, it's not just the futures market. It is the cash market, and you can ask different participants, but one of the most important parts of the bond market is, of course, the yield curve. So the question is, can you use that same approach on the yield curve? Well, let's take a look. Now, this is a chart of 2s, 10s. It's actually calculated by 10-year yield minus 2-year yield, but it's actually referred to in the marketplace as 2s, 10s. Now, the trend to the downside is what we call the flattening trend, and we have been talking about this on ETV since December, how the curve was going to flatten and continue to invert. In fact, this is a chart we put out for subscribers just over the last couple of weeks because we continue to track it. Please note, as I put on point number 1, how the trend line since 2013 and 14 has held. So a simple technical rule showed the trend was still to the downside. It's a key part of the yield curve. We still believe there'll be further inversion, and there's significant implications for that. And as we started to suggest 6 or 7 months ago, a lot of media attention would follow. But in terms of the tone of the yield curve, look at the strong moves to the downside, and look at the staccato, perfunctory moves to the top side, which were very limited in scope. So you had strong moves lower, you had small corrective moves higher, and that was particularly the case in 2018 to about June 2019 when we saw that small move to the top side. So here too, recognizing the tone of training, classical technical tools will help you stay inside the yield curve, not just the market itself. So overall, Elliott has a lot of value in terms of the patterns, the psychology, the measurements, and so many other implications. But sometimes just stepping back, looking at the tone of trade and whether it's impulsive or corrective will help you stay alongside the right trend and keep you focused the same direction that the market is focused.